Join with computer audio. Cool. And what do I gotta do again? What did I do last time? Participants. Cool. And okay, hey guys, let's just wait like a minute or so. Okay, if you guys have, like whatever, have notebook or whatever you want to take notes on, take notes. This will be recorded. I have clicked the button, so this will be recorded. But yeah, take notes. Feel free to ask questions in either the chat or come on the mic and ask the question. How do I pull the chat? Okay, so chat might be easiest. Okay, so if you want to go ahead, ask questions on the chat. You know, I'm not even going to really go through the introduction to myself. If you guys were here last time, you know who I am. I'm helping Z run the chat, and I've been trading for about 2 years now. Basically all options. Okay, so that's an intro to who I am. I don't want to spend too much time on this, guys. I only have about 30 minutes here on this webinar, so let's just quickly jump into it. So what I want to share with you guys mostly is let me pull this to my other screen. What I want to share with you guys mostly is basically my approach to the stock market in terms of what do I look for, and then how do I deal with pre-market, what do I look for entries and exits, specifically, you know, exits, where to take profit. And then I want to speak to you guys about the 2 strategies that I trade exclusively, okay? I don't mess around with a ton of things. I focus on 2 different strategies and I trade those. And if I'm wrong, I'm wrong. If I'm right, which, you know, I'm right, you know, 80–90% of the time with these, with the proper risk management, we're good to go. Okay, so the first thing I want to explain to you guys is what you should be looking for in terms of, you know, where you should be doing your research. Like, so if we look in the option chat, pro option chat, I posted this morning, where is it? That's yesterday. Where is it? I posted in here that I was, maybe it was in the other, oh, it was upcoming option play. That's right, my bad. Okay, this morning, 7 a.m., Tesla has a big bull flag on the 4-hour chart. Watching for a breakout today or tomorrow. Watch for a catalyst to push it, okay? Next, the key to this trade is the 9 EMA on the 4-hour. As long as that holds, we can see a new high. What did we see today? 7% Tesla, or whatever it was, ended up being, okay? So again, guys, how did I know that this was gonna happen, right? So let's go look. When I, you know, and you guys should be doing this too, spend an hour every night or in the morning, you know, preferably at night, and spend an hour or 30 minutes and go through your watch list and identify what has setups, okay? So what was I seeing on Tesla, okay? So I was seeing basically this right here, okay? This being a bull flag. We had a big run up the last few days, and then it went kind of sideways into a tight area. And I knew that based on this, you know, pattern, and based on the 9 EMA, which is this blue line right here, giving it support, as long as it holds this, it's likely that it's going to go up, because as long as it holds that, there's no way it's going down, and it's probably not going to go sideways too much longer. That's why I said, though, today or tomorrow, look for volume and a catalyst, okay? So Look, guys, every trade is going to have a key, okay? And I talk about that very often. Every trade will have a key. The key here was the 4-hour chart. You know, the other day, Amazon had a nice breakout, and the key to that was also the 4-hour chart, right? Let's see. So this had a nice bull flag here as well, which basically looked like, you know, this. Okay, and I was aware of this and was prepared to trade this move right here. I still think that this has another leg up. What is the key to the next leg up? Over this high, right? That's the key. So basically the point I'm trying to get across here, guys, spend time understanding bigger charts. Do not focus, don't come into every day looking at pre-market and then trying to determine what's going on, okay? You should know very well on the stocks on your watch list, at least on like the top 5, right? What do we look for? What do we trade almost every day, guys? Apple, Tesla, Nvidia, Zoom, Amazon, you know, those 5 right there, okay? So know those 5, know the 4-hour chart on all 5 of those. Is there a bull flag? Is it near an all-time high? Is it near a support? What is going on the bigger time frame? Because that's going to allow you to capture these big moves, right? That Tesla move today, $100 move. You're not finding that on the 5-minute chart, okay? So you got to look for that. You have to spend time on, you know, researching that. Okay, now that is my approach to kind of doing homework, okay? Now, in the morning, what do I look for in the morning? I am looking for what I would call an edge, okay? So in the morning, I'm looking for what is gapping up, what is gapping down, and then asking the question why, okay? Why is the stock moving? Is it gapping up? Why is it gapping up? Is there an upgrade? Is there, you know, some sort of news about retail numbers, which caused Amazon to pop? Is there earnings? Is there, you know, any number of things, okay? So you need to be aware of all of the news and pre-market of what you're trading, okay? You can't just come into the day and then look at your watch list and try to trade whatever is moving. You need to have a very, you know, focused approach. What I told the people on the last webinar, it's like going to the horse racing track with 20 horses, which is your watch list, and just randomly selecting one, okay? You need to understand the top 3 setups for the day. Which of the 3 horses are going to be your top? And how do you determine that? Whatever, you know, in stock trading, it's likely due to news, right? The big moves are going to come from news, okay? So you need to understand the news, and then that will allow you to put yourself in a, you know, in a setup that will maximize you know, your opportunity, okay? So, you know, guys, you can check upgrades and downgrades in the group, okay? Post it in here every day, NVIDIA. You can check upcoming option plays where I post some stuff where, you know, a lot of people post. So you want to make sure that you're spending time understanding the 4-hour charts for the bigger moves and understand every day the upgrades. It's not enough to just check, you know, once a week for upgrades. You need to be checking every day, staying up to date, okay? So let's go into the 2 strategies that I trade. Okay, so the first strategy is going to be what we are pretty much all trading, as far as I know, which is breakout trading, right? So what does that mean? It's basically support and resistance, and when the price crosses above resistance, we buy calls. Okay, so I mean, let's go look at Tesla from today. Okay. Now I'm going to look at this on the 5-minute chart. Okay, and again, you can see the level. So why this level? Actually, I think I used the 910. Why this level? Okay, how did I find this level? This was yesterday's high. What else was I looking for? On the 4-hour, I knew it had a chance to run because of the 4-hour chart. I knew that that was helpful, and then I knew it needed to get over yesterday's high day where it was rejected like 4 times, which was 1910. Once it got over 1910, you know, I got in calls, and that was my entry up. Okay, so that's how I found the trade, by looking at the 4-hour chart, then looking at the smaller level of you know, the 5-minute chart, and then entering the trade once the price breaks over that. Okay, now people often have a lot of questions in the chat about where do you take profit, what, you know, what are you looking for, all of these things. I'm not typically someone who tries to hold from here to here, okay? That's just not who I am. It's not realistic. You're going to get burned more often than not. and I'm talking about taking profits, guys. So everyone has a different strategy. My strategy is along the lines of just scaling out. So let's say I got in with 10 contracts here. I'm going to take, and this is 1910, I'm going to take half off at probably 1920 or 1925, depending how quick it moves. I think this one I got out at about 1925. Okay, so now I went from 10 to 5. Now I have 5 left. Now I'm going to look for another $10 move roughly, and that's going to be, you know, 1935. I'm going to take off another half, so I've got 2 or 3 left. Okay, so yeah, guys, if you don't, if you're not muted, Z, I'm going to mute you, Z. There we go. Okay, and then so I started with 10. I took 5 off immediately, locked in profit. I'm taking it off at predetermined levels. Okay, I'm expecting it to reject. Okay, and if it doesn't, who cares? I'm here to make money, not to try to hold for the most amount of money. I'm making 10, 20% most times. I'm locking in half here. I now have 5 left. I'm going to sell another 2 here. And then I'm going to probably try to hold the rest for as long as I can, but I'm probably going to end up dumping it near a big level, which is going to be 1950. That is my style of trading. And then what I do is I look to re-enter. Okay, so I look for something. Let me erase all of these. And then what I like to do, if something's in a bullish move, I like to wait for what's the inevitable red candle, right? I know that this is coming. So I'm not sure when, but I know it's coming. So I know that it needs a red candle. So once it has the red candle, I mark that level, and then I know that that is our level to get above. So once I see this, I know that, okay, there's its breather. It needed a breather. It needed a red candle. It needed a smaller inside candle. And then I can trade that break above highs. Okay. That is my strategy for breakout trading, guys. I'm very aware of the 4-hour chart, and then I'm also aware of smaller intraday levels, which is how I found the 1910 level. Okay. And then as for exits, I am exiting at predetermined levels. I'm not trying to hold from 1900 to 2000 on a weekly contract. It's unrealistic, guys. You're going to get burned way more than you'll profit in the long run. And you're going to probably have a very low win percentage, which will screw with you mentally. So just start scaling out at different areas. That's what I do. I'm not saying that's what you need to do. This webinar is just me sharing my strategy. Okay. So that is how I exit. Now, if you're looking at my charts, you want to see what indicators I have up. These are the indicators, okay? Exponential moving average, relative strength index, VWAP, which is volume weighted average price, ATR trailing stop, okay? Let me talk about these quickly. I actually don't really use the ATR trailing stop very often at all. It's basically though like a moving average, okay? And what I do use very often is the 9 EMA. You'll hear me call it out in the group. I actually called it out here saying the key to this trade is the 9 EMA on the 4-hour, right? Why do I like it? Because the stock respects it a lot, right? So you can see Tesla here basically held above it all day until, you know, I don't know, 2 o'clock, right? So this is another option that you guys can use for a stop loss. So oftentimes when I'm in a trade, let's say if I'm in Tesla at the start here, I'm going to say EMA is my stop loss. And the simple mentality to this, guys, is above the EMA is uptrend. Uptrend means calls. Okay, below the EMA is a downtrend, and downtrend is puts. So you should not be in puts above the EMA, and you should not be in calls below the EMA. Okay, so my mentality to this is okay, as long as it's above the EMA, it's in an uptrend, which means I'm safe staying in my calls. There might be pullbacks like this, guys, but you can sit in your calls as long as you're above the EMA. Okay, so I use this primarily on the 5-minute, but it also applies on the 1-minute. So let's go check out the 1-minute. And guys, I obviously, this is TrendSpider, by the way. I don't trade on TrendSpider. I trade on Interactive Brokers, but it's not a very pretty software to do a webinar on. It's very ugly. But here you can see, okay, guys, the blue line, look at every pullback to the EMA, bought up. Pullback to EMA, bought up. Okay, so if you are in from this break and you can literally say, you know, almost like an algorithm, stop me out when it breaks the EMA. Boom, you're stopped out right here, okay? It's not the approach I take, but that is an approach that you could take. Okay. And then, you know, it gets right back above it. Now, this is very important, guys. One thing I know a lot of new traders struggle with, and something I struggled with. So we have uptrends, downtrends, and then chop, okay, or sideways trends. You want to be able to identify all three, okay? Very clear right here, this is chop sideways, okay? This doesn't mean never look at it. It just means this is consolidating, getting ready for a big move. This, you should not be trying to force, okay? Look at all of these wicks. What do you see here, okay? It's getting smoked off of the top end of 2000, but bought up right here off the EMA. What's the point of being in here? You need to wait for way over this, okay? So here is your trade, okay? And yeah, so, and also guys, one thing to note, I know we're in the group pretty much all day and you guys, you know, it can be fun to be in the group, but look at what time the chop starts around, right? 12 o'clock. When does it end? 2 o'clock, right? 12 to 2, lunch break, Wall Street's on lunch, you know, volume slows down. This is prime for fake out. So Lav D in the group, she asked a question, how can I avoid a breakout? Or how to, sorry, I misread. How can you avoid a fake breakout? Really, there's not a great way to avoid a fake breakout except for, you know, watching for volume. So on this breakout, the volume was very good. And then watch for volume and watch for time of day. So a lot of fake outs will happen either right in the morning or midday. So right in the morning, if you're going to choose to trade in the first 5 minutes, you need to just almost assume that you're going to be wrong and adjust your size accordingly. You cannot trade the first 5 minutes of the day saying, oh, I'm going to be right and I'm going to crush it and nothing bad is going to happen, because there's a ton of fake outs in the morning and options are mispriced. So if you're going to trade in the morning, go in with the mentality, not the mentality, but go in expecting to lose, okay? And use your size accordingly, because there's going to be a lot of fake outs. And then second, look for fake outs midday. Other than that, try to forget fake outs are even a thing, okay? In the morning and in the afternoon, remember them. During the midday morning session, forget about fake outs and just be confident that when it breaks, it's going to be your move, okay? So that's how I approach it. If it's in the morning or midday, I expect it to be a fake out. And if it's not, I'm expecting it to be a real move. Do I wait after 5 minutes before I get in? I don't know if Lav is a guy or girl, but I don't wait 5 minutes. No, I don't. Personally, I get in, and if I'm wrong, I use the EMA to stop me out. But again, I go in with different time, like in the midday. If I'm trading this, I'm kind of assuming it's going to be a fake out, right? So I'm not chasing this break. You know, like I am like all of these, I'm like fake out. I know it's going to be a fake out. And you know, like, so I wait for it to get like what I like to do is like I know it's going to do at least 1 or 2 fake outs. So once it did the first fake out, I knew that the key to this trade, again, guys, the key is always changing, right? There's no specific, that's why a lot of times you guys ask questions in the group, like yes or no questions. Every trade is unique and every trade will have its own key. So here I knew from experience that midday is prone to fake outs. So I said, let it do a fake out once, and that will establish the first high a day, or like the, you know, the new high a day. New high a day became 202.70, or sorry, 203 basically. And that was the level that I knew once it got above that, it's no longer a fake out and it's going to run. Okay. Mushin asks, so when you get in on the break of 1975 after breaks out or in consolidation, on this will get in on the breakout. Okay, on the breakout, because I don't know if this is high day or not, right? But I have established that is the next level I need to trade. This is the key to the next trade. This level here on the top of this candle is the key to the next trade, okay? Every trade has a key. If you do not understand what the key to a trade is, then don't take a trade, because you're just putting money in something because other people in the group are talking about it. You need to understand the key to every trade, okay? The key to this trade was you know, okay, here over 1900, but the trade I made was over 1910. Where did that come from? Yesterday's high a day. Where did this key come from? I knew that it needed a red candle to pull back, because there's inevitable, it's going to have a red candle. I waited for the red candle, and then that told me, okay, this is the key to more highs is through 1975. Nice whole number. I like whole numbers. That's how I trade. This, I knew that there was prone to a fake out because it's midday and it's a very wide open trade, guys. 2000, just a, you know, whole number, wide open, a lot of eyes on it. I knew there'd be a fake out. So I knew the key to the real trade would be wait for the fake out and then trade the break above that fake out level. Okay, so that is the key to this trade. Every trade is gonna have a key. Okay, so mental stops or mental stops. Never, I've never really with options set a, you can set stops with options if you need to, if you're like at work or something, or you can't watch it, right? If you're running into a meeting and you're like, okay, if Tesla dips, if my option dips below 30 on Tesla, get me out, like go for it. But I never do. If I'm in that situation, I'm just gonna exit the trade. If I can't watch it, I'm gonna exit, unless it's like a deep, you know, if it's a swing trade, I don't care about. Mushin said, oh, okay. Next question. Oh, why did I get in on this dip? Yeah, so I called this out in the group that, you know, I think a few times I said it. Basically, I knew that it was, all this is a market maker trap. Like this is trapping shorts. And I could see here that there wasn't enough strength for it to just keep going through highs. So I figured that it would have to come trap some shorts. And then these shorts basically would add the fuel to do this move. Getting these shorts off on the wrong foot is going to now cause more buying pressure because they're going to say, oh shit, I'm, you know, fucked. I'm caught on the wrong side here. Let me cover. And that's that buying pressure right here. How did I know? Honestly, guys, like, again, there's no black and white trading to this. It's just, I know that I've spent so much time on the charts that I understand what the market maker's thinking. I understand what shorts are thinking. So I knew that shorts were thinking, oh, here's the dump we want. Trap. I knew that Tesla was going to continue. I knew that it was going to continue to rip. And I knew based on the 4-hour chart, right, breaking out, that I was comfortable swinging, right? This is what I was looking at. We broke through this level right here, 1940. And I knew that that's probably more highs incoming. So I had no problem buying next week's contracts. I didn't go in for a scalp or anything, guys. Like I was just buying the dip, understanding that this was shorts thinking, oh, here we go, got it. And all of a sudden, market maker rips it the other way. I think I called it out in the group. A dip below 1985 was the move I was looking for. Why 1985? Right here, okay? Every time it dropped, it kept bouncing off of that. So what happens is shorts will think, okay, if it gets below this level, it's dumping. So what do the market makers do? They bring it below that level and then right away bring it right back. Okay, so that's how I knew with that. What is the bands using in Trend Spider? These are, the blue one is EMA, and this is an ATR trailing stop. Don't worry about the ATR trailing stop. I honestly could and should take it off my charts. I never use it, but I just use the EMA. That's basically it. Okay, so that is strategy 1, and that is just straight up price action, guys. But the only difference is that I spend a lot of time on the 4-hour charts and the daily charts, so I'm confident in what I see. I understand the news, and I, in terms of, well, another thing, how do I exit? I have predetermined levels where I sell into, and I don't care what happens. How do I sell? I sell at the ask. So what that means is as the price is going up, I'm selling, yes, maybe a bit early, but I'm selling it at the highest price at that current time. So if the bid is 19 and the ask is 20, I'm putting in my sell at 20. If it fills me, so be it. I'm not like rushing to get out, I'm selling at the bid, but I'm, you know, starting to submit my orders to exit, and I sell at the ask, okay? And then I use the EMA as a stop loss in a lot of circumstances, okay? So that is strategy 1. Strategy 2 is basically focusing on reversals and I guess buying dips and shorting, you know, rips. Buying dips, shorting rips. How do I do it? I focus on the relative strength index, okay? So what is this? Normally, yours will be set probably 70-30, okay? And what this typically means is over 70 is going to indicate that the stock is overbought, quote unquote. Under 30 is that it's oversold, okay? And what those mean in, you know, simple terms is that it should pull back from above 70 or it should bounce from under 30. I like to adjust it to 20 and 80. And why? Because that makes it even more extreme, okay? So that's even more like, oh, this is really gonna bounce or this is really gonna reject, okay? So now how do I use it? First off, you know, it needs to be above 80 or below 20, and then it needs to be near a whole number. So I don't think I took any on it today. Actually, I think I took the Tesla very quickly. against 1950 right after I got out. So let me see. 1950. No, right here. Okay, so here, this guys is another example. As this was ripping up, yes, I'm going against the trend, okay? But I also know 1950 is probably gonna be a very difficult level. And the RSI, here I'm on the 1 minute. I use it on the 1 and the 5. And again, guys, you're gonna want a yes or no, black and white answer. There is none. It is whatever the key to that trade is. The key to this trade for me was the 1 minute chart. Why? Because I knew I needed to be very quick. Okay, so that was the key to me on this trade. 1950, hold number. I have the RSI over 80, and I keep a stop loss just kind of on the other side. Probably here was going to be like 1955, and then it gave me about an $8 drop, and then I got out of my premiums. Okay, I got out. Okay, so this is, again, a little bit risky because yes, it can continue to push up, but based on the RSI and based on the whole number, I was willing to take that risk. Okay. I think NVIDIA had one this morning actually that I caught. I don't know if its RSI was over. I just knew that I dip bought it. No, it wasn't. Okay. I'm trying to look over my trades. Mostly today was just Tesla uptrend. Let's see if I know SQ had a huge pump. Okay, here's another good example, guys, on what I look for. What do you see here? Whole number 155. What do you see? The RSI over 80. What happened when it hit 155? It pulled back pretty hard, $1 right to about the VWAP, which is the black level. Okay, $1.20. That is a pullback that I would have traded. Okay, if I was focused on this. Okay, what are some other? There were some better examples the other day that I traded. I just didn't really trade any today. Let me see if I can pull this out of the way. I didn't trade much of these today because today I was mostly focused just on Tesla, really. Let me see. Well, I mean, NVIDIA had some good ones earlier this week I traded. Okay. Let me pull through. The day before. Okay, right here. Okay, guys. This trade right here. So again, if you guys are getting caught on fake outs, this might be a reason why. Why would you chase NVIDIA puts below 485 here? Unless there's news that NVIDIA is like getting delisted and they are going to continue this sell-off, there's no reason to be chasing puts all the way down here. If you do, you need to understand that you need to understand how the market works, right? Red candle, what do you see? Green candle. Red, 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 green. Okay, it's not going to go red, 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 red until it goes to zero. It's just will not happen. So, right, this is how I buy dips. You can just blindly buy it off 485, but I like to have this RSI as confirmation. So the RSI here was, if you look at the number right here, was roughly 14. So that gave me confidence that it was going to bounce off of 485. There was no negative news. It was just profit taking. I got in calls here at 485. As you can see, what does the market maker like to do? Dip it right below. I'm not stressed about that. And literally the next candle, boom, and it came all the way up to about 490. Okay, this is a secondary example of how of what I look for when I trade. So some days like today, I didn't really do much of this because Tesla was just nonstop, and Tesla made the whole day. So I didn't really need to do too much of this. But some days there's not really much movement, and I do a lot of this RSI stuff. So here again, RSI over 80. RSI over 80 or below 20 is not enough. It needs to be near a big level. Okay, so here 485, and then it gives a pullback again, to about 482. Okay, so this is the secondary strategy. If I don't have a setup that I like that I like for price action, like today Tesla, or Amazon the other day, or Apple later today, or all those things. If I don't have those, I will look for these RSI trades. And if I don't have these, then I'm probably just going to chill for the day and not really involve myself much. But those are my two strategies, guys. Those are exactly what I focus on. I'm not too worried about, anything else but those. Okay. When Z asks, when you plan on getting into a day trade, do you do same week at the money? Yeah. So if I'm, let's say right here, if I'm trading puts on NVIDIA, I'm probably going to trade the 485s or the 480s. Okay. Depends on what I want to do. Depends on zero. So a little trick that I have, guys, if you guys are taking notes, Monday through Wednesday, I like to trade at the money. Okay, Monday through Wednesday, I will trade at the money. So, or a little bit out of the money. And then on Thursdays, Fridays, I try to trade like either right in the money or, as much as I can, I'll trade in the money. I'd rather do 485s today and Fridays. Why do I do that? Because with option pricing, you have two things basically that make up your option price: intrinsic value and extrinsic value, which the extrinsic is your time value. Okay, on Thursdays and Fridays, there's a lot of theta, which eats up your option pricing. Without going too in depth, on Thursdays, Fridays, I like to stay in the money because the pullbacks don't hurt me as much, and the contracts are so cheap anyways. Okay, so just, that's what I prefer. And that's kind of it, guys. That is the two things that I focus on. I wish I traded more RSI so I could show you guys that today, but for your notes, what you should focus on, make sure you adjust it from 70-30 to 80-20. And then you want to look for it at a whole level. Okay. So let's see Zoom. I know Zoom ripped up today. Did they have any trades that could have worked? Probably the first one off of, what level is this? Yeah, right here. Okay. So you could have got way over 80 here. What do you see? A lot of green candles. What does that mean? It's really due for a red candle. Okay, so you could have taken puts here against 285. Yes, it's against the trend, but based on the RSI, based on the whole number, based on all of the green candles, pretty safe play in my opinion. You just,
I know a lot of these are.
The thing is, guys,
but
you have to know
I have
when
no idea. I don't follow baseball on the slightest.
You have to know when to exit trades, guys. You can't get in this and expect for the price to drop back to 280. Okay, you're going against trend. Okay, so you have to understand that going against trend, you need to be quick. You need to exit on these pullbacks. If you're trading options, you don't need, I'm not swing trading this based on an intraday RSI. This is just a quick little bit to pad my, account. Like I might take this, make 8%, 10%, but I know to get out and I don't let that go to a negative 30% loss and then cut it because I let it run against me more because I'm like, oh, what I thought it was going to go all the way to 280. No, when I have profit and I see buying pressure kicking again, I'm getting out. I don't care if it's 1%, 2% flat, negative, green, anything. When you go against trend, you need to know really quickly when to get out. Okay. Any questions, guys? We have, 7 minutes left here, and then I got to run actually too. So you guys have any questions? Those are the two trading strategies I trade. I've had a lot of you guys, maybe not you guys in the chats or in the webinar specifically, but I've had a few people in my Discord messages asking me, oh, I get so distracted during the day. How do you know what to trade? This, that, and the other. The only thing I can say, guys, is I know it's exciting to be in a group, but if you can't handle being in a group, you need to, find a way to handle yourself. There's so many messages in the group nonstop. Tesla, Amazon, Apple, Zoom, Fastly, Square, Visa, all of this shit. You need to understand what is my plan for trading? How do I want to make money? If trading is a business, you need to have a business plan, aka a trading plan, and you need to know how to execute it. Okay, so I have two main sources of income for my trading, and those are what I focus on. Do I like looking at the group and following other people's lead if they see something good? Yes, but I also know that it needs to fit what I want to do. Okay, so the callouts are good, but don't let them distract you from what you're going to do. And if you don't know what you're going to do, don't trade tomorrow. Spend all day tomorrow figuring out, or how long it takes to figure out exactly what your trading plan is, and then come to the market ready to execute. First question, Noah, how do you use VWAP with your strategy? I use VWAP as so EMA is for trend, uptrend, downtrend. Above it is uptrend, downtrend is below the EMA. VWAP I use as a price level basically. So let me see Apple. I use it as a price level. So basically support resistance. Look at Apple today, off the support. Okay. So I use this as a price level. Okay. I don't really use it in terms of my strategy. But if, you know, let's say I was in calls here and I was in calls and I'm getting smoked and I'm about to get stopped out because it's below the EMA, I'm just going to use the VWAP as my stop loss because that's a big price level. And I would have stayed in. And I would just continue to use VWAP as my stop loss, and that's it. So that's how I use it. But to be honest, I don't think I've used VWAP in a long time. It's important to have these things, guys, so you're not jumping in puts right here and then being like, oh shit, I didn't know the VWAP was right there. Because right here, if you take away the VWAP in this area, guys, this looks like, oh wow, it's about to sell off. But then boom, you know, reversal. Why? Because VWAP, okay? Same thing here. Wow, it's gonna sell off, reversal, okay? Amir's, how long did it take to become consistent? I would say that I went a very, how can I say this? There's periods of consistency and inconsistency. So I still would say I'm not 100%, I'm not a robot where I'm consistent every day making 1% of my account or 10% of my account. There are weeks where I'll make 30% of my account. Then there's a week where, you know, I had some weeks in March where, you know, the market was selling off super hard and I kept trying to buy the dip. And it just kept fucking, you know, the next day we'd open up negative 10%. And it was like, you know, so it depends. There's periods of really consistent, non-consistent, but overall, you know, it evens out. But yeah, I've been trading for 2 years now. So hopefully that answers your question. Again, you guys, I know as young traders, because not young, but new traders, I've been there. You want yes and no clean answers. So you can tell yourself, took Mitch 6 months, I'm at month 5, 1 more month, I'll be there. Mitch does this, I'll do that. Z does this, I'll do that. Guys, hopefully you guys start to realize that every trade is different. In every trade, the only thing that's consistent for me with every trade is I need to have an edge and I need to have a key. If I don't have a key to a trade, the key changes all the time. It could be the RSI, it could be the 4-hour chart, it could be the 5-minute chart, it could be news, an upgrade. The key changes every time. It's like a key to enter multiple different doors. It's not a universal key, but every door will have a key. Every trade will have a key. And if you don't have a key, then you don't enter the trade. You don't enter the door, okay? It's as simple as I can put it. Can I set EMA band on TOS? Is that different from me? Yeah, exponential moving average and the VWAP are different things. Okay, so the exponential moving average will have different lengths. You can change it to 15, you can do 20. I keep it at 9. It works well for me personally. What does the yellow line mean? The yellow line is the, The yellow line is the ATR trailing stop. A guy in our group, actually, Greg Colliers, I hope I'm saying his name right, on Instagram, he uses this a lot. Basically, what it works like is just a moving average, though, guys. So, again, you can see it's just kind of supports the price. I don't really use it for trading. Any questions, guys, other than that? Main takeaway should just be do your research, guys. Like, do your studying on your 4-hour charts. Like, there's a reason I did so well on Tesla today. It's because I came into the day at 7 a.m. knowing if Tesla presents that opportunity, I am going for it, right? Like, I don't even know if you can see. In my notebook, I have Tesla 4-hour EMA, right? That's the first thing I wrote down when I sat down this morning. I was like, I want to trade this over the level, okay? So that's it, guys. If you have any questions, this is recorded this time, so feel free to look over it. If you have questions with the RSI or anything, feel free to hit me up in the DMs, okay? That is it. See you guys.